Okay, so I recently talked about Cathie Wood, the famous Tesla investor who has been calling for a $7,000 Tesla stock price in the next 5 years. Well, even though she's gained a lot of fame for her bullish Tesla predictions, there's a lot more to her portfolio than just the one company. So in this video, we'll be taking a look at her portfolio and exploring her thoughts on how the portfolio has taken shape. I'm not going to make you wait until the end of the video either. Let's just get straight into it. On the screen, you can see the top 10 holdings of the ARK Innovation ETF with a ticker symbol ARKK, and this is Cathie Wood's main fund. So I'm going to run through these companies quickly, as I really want to focus on what Cathie Wood describes as her 5 platforms of innovation. You see, anyone can simply buy this ETF or some of these companies, but what I think really adds value to you is to understand Cathie's thought process when picking these companies, and how she sees the world changing with these new technologies, with these 5 platforms of innovation. But let's run through these companies first. In position number 1, we have Tesla as their largest holding with over 10% of the portfolio. Next, we have Invitae, who are focused on genetic testing. Third is Square, a payments and financial services company. I'm sure you've seen their sleek payment devices around. Next is Crispr Therapeutics, and they are focused on gene modification. This obviously works well with Invitae. First, you need to find the faulty gene causing things like disease, and then you can modify them through CRISPR. In number 5, we have Roku. They have a device similar to the Amazon Fire Stick, they sell their own smart TVs, and they have a streaming platform. In number 6, there is 2U, an online education platform, partnered with the likes of Harvard. Next is Proto Labs, who allow people to create prototypes through 3D printing. In number 8, we have Illumina, one of the leaders in DNA sequencing. Again, this investment fits with the theme of discovering and editing genes which can cause disease. In number 9, we have Zillow, a real estate listing and investing platform. And finally, we have LendingTree in number 10, an online lending marketplace connecting borrowers with lenders. So those are the top 10 investments in their portfolio. But what's really interesting? Why has she picked these companies? On the surface, they actually seem like quite odd choices. I mean, we have 3 companies in the top 10 that are focused on DNA sequencing or gene editing. You don't see that in many portfolios. So the purpose of her investments is to focus on the theme of innovation, companies which are using groundbreaking technology to shape the future. So let's hand it over to Cathie to outline what she believes are the 5 game-changing pieces of technology which will change the world in the next decade.
So the 5 innovation platforms are DNA sequencing, that's foundational to find those mutations. Energy storage, so the shift from the internal combustion engine to electric vehicles. Robotics, especially with collaborative robots, which will be covered in sensors and able to work alongside human beings, increasing the productivity of human beings. Artificial intelligence, which is going to change the line item of, every line item of the income statement. So every company, every industry, every sector is going to be transformed. And then blockchain technology is the fifth platform that we think is going to be quite disruptive.
Okay, so there's no doubt that each of these 5 platforms could change the world. But we also know that each of these technologies have been massively overhyped at various points in the past couple of decades. Editing DNA has been possible for many years, but has never really taken off. I know from personal experience that adoption of blockchain won't occur overnight, and the same can be said for the rest of these. So yes, these technologies are groundbreaking, but why now?
So what we are looking for in terms of impact is figuring out, have costs associated with one of these platforms drop to a low enough level that they're going to unleash waves of demand and get us into that exponential growth curve.
Okay, so the argument of cost reduction is very compelling. As much as we might have some potentially groundbreaking technology around, if it costs more than the benefit it offers, companies simply won't adopt it. And Cathie uses something known as Wright's Law to show how costs decrease. Essentially, Wright's Law stipulates that as we produce more of something, we become more efficient at producing it. As a result, the costs drop, and so that adoption that we're talking about can seriously grow. Well, if these 5 platforms of technology are able to become cost efficient, I think it's fair to say that each of them could dramatically change the world we live in. So let's get specific. Let's talk about our first platform, and this is one of the craziest to consider: DNA sequencing and gene editing.
DNA sequencing costs now are below $1,000. Last year, the number of whole human genomes sequenced around the world was 2.4 million. that was half of all the whole human genomes ever sequenced in history. So we're already at the tipping point, and we believe that number is going to go to 100. So that's almost a 40-fold increase in the next 5 years. So that is truly exponential growth, and it is going to change healthcare decision making. It's bringing real science into healthcare decision making for the first time. So our geneticists, and you're going to have one, so am I, are going to be able to identify for the first time the needle in the haystack. They're going to be able to identify which genes in our genomes have mutated. In other words, they've developed a programming error. And now with CRISPR gene editing, following it up, we're going to be able to correct those programming errors. It's going to be incredible to catch cancer in stage 1 and then edit it away. We think that's going to be possible in the next 5 to 10 years, and probably sooner than that. In fact, last week, there was a journal of New England, the New England Journal of Medicine, published a report on a man with leukemia whose leukemia after CRISPR gene editing has disappeared, and 19 months later it still has not returned. So that was, that's a pretty complicated cancer, and we've gotten some of the heavyweights in the gene editing community to say, wow. So we may be closer to this than many people believe. CRISPR, gene editing. We have sized this market, just to give you a sense. I mentioned earlier the mutations that geneticists will be finding. Well, here is the promise for being able to correct those programming errors, edit those genes. The first human trials are taking place here in the United States, and one of them is pediatric blindness. Pediatric blindness is rare, but it is caused by a single mutation. So this study is done on monogenic diseases, those caused by just one mutation. In mice and in non-human primates, CRISPR gene editing has been able to correct the blind mice and the blind non-human primates and have them see for the first time. We're going to see if this works in human beings. We'll get some milestones this year, and they may even stop the trial if it is working this year. We'll know pretty quickly.
Okay, so listening to Cathie, you can't help but feel excited about the possibility of this working. But my responsibility to you is to make you consider both sides of the arguments. Now, I'm obviously not a geneticist, so I can't go into detail on gene editing, and there's really no point me just regurgitating some facts I found online that I don't really even understand myself. Instead, I'm going to point out that nearly every one of these investments is high risk. Yes, that also means they are potentially high reward if they're successful, but with gene editing, for example, it's likely a binary outcome. Either this study Cathie just highlighted is successful and the stock's price might soar, or it won't be successful and the stock price may drop. So as you're listening throughout this video, just be mindful that we're talking about very high risk, high reward investments. I'm not a financial advisor and I can't offer you financial advice. So all I'll say is, even though I am obviously fascinated by Cathie's approach, hence I'm sharing this with you, despite that, just be aware of the risks because they really are significant. We are talking about high risk investments here. Now let's look at the other platforms of innovation, beginning with battery storage. And this, of course, is where Tesla comes in.
So a stock like Tesla, now being analyzed in the traditional world by auto analysts, which are analysts focusing on a very mature industry. They're value analysts, right? So price to book, dividend yield, all of those metrics are important to them. Are going to find it difficult to analyze a company that is not just an auto manufacturer, but also an artificial intelligence chip designer and an autonomous taxi platform provider, which is a transportation as a service. So we've got 3 analysts focused and collaborating on understanding how Tesla is going to evolve during the next few years. Battery cost tipping points. This is energy storage is going to transform our economies. We've built our economies on the industrial combustion engine. The developed world has, at least. And that is about to change radically. And you know, this is the first time in more than 100 years that we've had this kind of a change. It is such a change that is very difficult to get investors to understand how quickly this is going to happen. So to give you an example of that, and it's all because of battery cost declines. Remember, I say cost is the reason, always, always, always. That's where it starts. The technology and then the cost coming down. So 3 years ago when we started doing, well, really 3 to 4 years ago when we started doing this work, the EIA made an estimate for electric vehicles. They took it out to 2022. And their estimate then was the number of electric vehicle sales in 2022, on here we have 2023, but in 2022, was going to be 250,000 units. In 2018, this chart updated, would be nearly 1.5 million. That was just a 2-year difference. They were making a projection for 5 to 6 years out, and they were wrong by orders of magnitude. We believe this is about to happen again. If we are right, the cost of an electric vehicle is going to drop below that, and this is the average electric vehicle of a gas-powered car in 2022, and it's going to keep falling, so that in 2025 we'll be at 15,000 compared to 25,000 for the average gas-powered car. We are going electric. Not only because of cost, but because they're better cars. You can see our estimate for 2023. When the EIA was projecting 250,000 units for 2022, our estimate was 17 million. We looked like raving lunatics. We have not changed that estimate. And you can see what we think is going to happen from 2022 to 23, 17 million to 26. Talk about exponential growth. This is going to be shocking for the transportation world. And the autonomous taxi network model is a very profitable model. The gross margins there are in the 80% range. The gross margins for auto manufacturers are in the 20 to 30% range, night and day. So you need a completely different kind of analyst and a different way of thinking about the world. No longer sectors, but platforms. What ARK does is we do a lot of original research, trying to size opportunities and figure out where the unit economics are going to reside. And so just to give you a sense of how meaningful this is, if someone had done this and in the first wave of computing around the PC, well, first the mainframe, the mini, and the PC, by 1998, that in the market was valued at $4 trillion. The second wave of computing, the internet, the next 20 years, is now valued in the market at $10 trillion. If AI, artificial intelligence, is as impactful as the internet was, then this is a $30 trillion opportunity. And right now in the market, we believe it is a value today at $1.5 trillion. So if you do that compound annual rate of return over the next 20 years, that's a 14% compound annual rate of return. Now, we think it's going to be a lot faster or a lot more exponential than that. And the reason is it's going to be so much more impactful than the internet. The internet transformed media, it transformed retail. It did not transform healthcare or the industrial sector or the utility sector. AI, deep learning, is going to transform all of those. So we think there is a 25% compound annual rate of growth to be delivered from opportunities associated with artificial intelligence. Collaborative robots, we believe, are the reason that the robot industry will see exponential growth. So the robots that we are used to seeing are typically in cages in auto manufacturing plants. They're very dangerous. Collaborative robots will be outfitted with sensors and will be able to work alongside human beings. There are labor shortages around the world. They'll take the menial tasks that nobody wants to do or that just don't pay very much at all, and they will help to elevate human productivity. We think human beings will oversee them and be able to do their jobs much, much faster than they have historically. So we believe that Teradyne is the leader here. Teradyne bought a Danish company called Universal Robots, and we think collaborative robots will insinuate themselves into any industry, every industry. So you'll have artificial intelligence and collaborative robots and the fusion of the two. In this world, all you have to remember, if you're worried about confiscation of wealth, either directly, as in Saudi Arabia, or indirectly through inflation and a depreciating currency, let's say the Indian population wants an insurance policy against that. All they have to remember is a key. It takes a lot to remember this, but there's no gold that can be confiscated. This is digital gold. You can't confiscate it. So it'll be very interesting to see what happens.
So do you see Bitcoin and cryptocurrency in general only getting stronger as the years progress?
Yeah, I think in watching the drop in the Bitcoin price from $20,000 at the end of 2017 to $3,000 in the early part of 2019, it's now back to 10,000, of course. We've witnessed an increase that Bitcoin's share of the crypto asset network value, think market cap in our language, but network value. So there are more than 2,000 crypto assets. Bitcoin's share has gone from the low 30s since that peak at 20,000 to roughly 70%. And so what that has told us, or the way we interpret it, is that Bitcoin is the reserve currency of the crypto asset ecosystem, which is an exalted role. And so our confidence has increased for that reason. It's also increased because of confiscation of wealth that we are seeing in the form of hyperinflation in Venezuela and Zimbabwe. Now Argentina is in trouble. So these Hong Kong's, boiling over. And so this idea of Bitcoin as an insurance policy against actual confiscation of wealth or confiscation of wealth because government policies are destroying purchasing power, we think that's a rising concern around the world, and that Bitcoin is an antidote. And we've dimensioned it in many ways, but that's at least a $2 to $3 trillion opportunity. And that's just for the super wealthy if they decide to have an insurance policy, whereas Bitcoin today is roughly at a $200 billion market cap. So a long way to go, just for that one use case. Think any continent like Africa, where cross-border transactions are prohibitively expensive. And you can see here on average transaction value, the average transaction value of these is $15,000. This is business to business. And it is happening, it is burgeoning in other parts of the world, and it is going to open those parts of the world, open them up to other parts of the world and trade and really improve a lot of these countries.
So Cathie highlights two use cases for Bitcoin and cryptocurrencies. Number one, a storehold of wealth, and number two, cross-border payments. Now, blockchain and cryptocurrency might be the most controversial of these technologies. Partly, I would say, because they are the most recent to really join the spotlight, and that means they're the most difficult to use, there are many scammers around, and investments associated with this market are the most volatile. However, the underlying technology itself has the potential to change the world in a similar way that these other innovative technologies can as well. Now, Cathie is describing a pretty bullish long-term picture here, and in fact, she's bullish in the short term too, so this may somewhat confuse you. After all, I've made videos recently talking about Ray Dalio, who believes we're in the start of a depression, and here's Cathie Wood saying she's bullish. Well, if it sounds confusing, good. It should be confusing. If anyone makes you feel like investing is easy, don't trust them. As I've always said at the end of just about every video, nobody knows which way the market is actually headed. Maybe Ray Dalio is right, maybe Cathie Wood is right. If you don't feel confused about which way the market is headed, at least a little bit, that's actually, I would say, quite a problem. It indicates you are too sure in your opinion that the market is either headed higher or headed for a crash, and so you might not sufficiently hedge your bets. So if, like me, you're interested in following Cathie's progress with ARK Invest and want to learn more, I'll include a link in the description. To be honest with you, Cathie's approach, it really resonates with me. My own thoughts on how markets are converging with technology are very similar to Cathie's, but I'm also aware that the companies she invests into are very high risk. Also, with Tesla being over 10% of the portfolio, the outcome of the fund, at least in the short term, might be heavily influenced by the short-term price of what happens with Tesla. And as it's been so volatile recently, there's a lot of risk associated with that. Now, I'm not a financial advisor and this isn't financial advice. All I'll say is be aware there are significant investing risks here. ARK Invest is a type of fund which could be the best performing in the next 5 years or the worst performing. And that's why I'm always talking so positively about diversification, because in my opinion, and it is just my personal opinion, diversification looks to me like a good idea, especially considering how crazy volatile the market is at the moment. If you've enjoyed this video and want to learn more, check out this video up here. And of course, just thank you for watching.